What's going on, Shroot Stock Squad? Welcome back to the channel. If you're new, do yourselves a favor, hit that subscribe button, come join the Discord, link in the Patreon below, because we're making wealth over here. None of this is financial advice. Now let me get into this video. All right, guys. So today the portfolio took another hit. Surprise, surprise. But that's just been the theme for us, all right? And let me show you what I ended up doing today. I just bought a little bit extra into CTXR. This thing took another dip. What do you know? And this is something I want to tell you guys. Whenever you're in these plays of pharmaceuticals, especially these newer ones that are out there, the penny stock pharmaceuticals, whenever you see that they're doing, like, let's say a phase 3 trial, phase whatever trial, there's some sort of catalyst. With these companies, when they don't have news, that's not good in a way. So I want you to think of it. In these sort of plays, no news is almost like, I don't want to say bad news, but there's nothing to push the stock up or keep it going, especially a company like Citius. They have no revenue as of right now. So it's going to put downward pressure on it. There's also, short sellers and things like that. There's multiple factors that can push this stock down. But one of the things to understand is when there's no reason for the stock to be going upwards, then especially when there's no news, that means you can't really see, it's going to be harder to see a green day from it. Let's just say that. It's not so much, at that point, it's not even really worth, it's not really based upon the stocks itself, like the company itself. So, I have a heavy position in this, 25% of the portfolio. I know it's heavy. This company, we're basically waiting to see when that, when the committee does its review, the DMC reviews its, 65% of the patients when they get their treatment done for the phase 3 trial. So they're expecting that to be in May, but understand that can get pushed out a little bit later. So this stock, we can see, especially if they decide to not complete their review until, let's say that DMC takes a while to finish their review. And remember, they're doing their share offering later. They're voting on it at the end of May. If we end up seeing them execute on a share dilution and we see this DMC taking a while for their reviews, this Citius can go low. We don't know where the floor is going to be. So it's hard to predict it. I still think in this company, their Minilock technology itself, the one that they're trying to get the approval for right now, it's hard for me to make a negative point towards that drug. Let's say that. The thing that is a red flag for Citius, which is obvious, it's a penny stock. They have no money. This is the first of its thing. So highly risky, but the goal of this portfolio, guys, it's to grow this thing to 1 million. So I have to, in 2 years is my goal. And it's going to take risky moves like this. So, my goal is to make this thing into $1 million before I turn 30. So my birthday's coming up at the end of the week, so I'm going to be turning 28. That means time is crunching, so I got to make some moves like that. Let's see what else is happening. Disney, Disney also took another hit. Guys, and everything I'm showing you here, these green days and red days, this sort of transparency I'm showing you, I'm only doing this stuff to show you guys it's not always going to be rosy. There's other YouTubers out there who can give very good stock picks, who have much more experience than me, quite honestly, some of them. Stockmo, for example, this guy he's been trading for a long time, and he knows a lot more than I do. He's a great source of information. I just do this thing to show you guys. It's nice to see someone else, in the thick of it with you. So that's kind of why I'm doing this. So Disney right here, this is, took another hit today. Man, it's I personally think this thing, they still have their reopening at the end of the month. This is going to be another catalyst for it. They got their movies. Nothing has changed, guys. Disney's going to be a good long-term play. Apple, same story, good long-term play. I'm just reiterating the same stuff I've been saying, and I'm sure so many of you guys are tired of hearing the same story week after week, day after day, right? Trust me, I understand it. When I first began my journey 10 years ago into investing, it was a lot of red days I had to see, and for months on end I had to see it. So that's everything I'm trying to teach you guys and show you along this way. I learned it the hard way. I've done the FOMOing mistakes. I've done the panic selling. I've done a lot, all the mistakes you guys think you may be making, especially when you're starting out trading. I've made it. I don't want you to feel like, it's the end of the world if you do something like that. You just got to take the lessons and then apply them in the future. All right. And that's kind of why I made this channel. I want to show you guys the mistakes I've made and what I've learned and how you can apply it so you don't have to lose the money, since I already have. None of this is taught in a book. It's real life. And one of the things that I really got to express here is how it's very easy for me to come here and tell you guys buy and hold, buy the dip, hold strong. It's easy to say it. It's another thing to apply it. I want you to see this thing. You just take a look at Apple here. Think of what people must have thought here. Let's say you were 2018, you bought Apple at $54. Okay, September 2018. You took a huge dip down September. So think of how many months went by before you see 54 again. September, October, November, December, January, February, March, April, May. Look at this. The next time you saw $54, it didn't even hit that in May. The next time you saw $54, all the way here, September. It took 1 year. It took 1 year to see the same rise again. But do you notice what happened once you did that? Boom. I took a hit last year, and then another boom. I want you to understand this. This is not to say, invest in Apple. This is not to say invest in this company. This is not to say any of that. This is to say, if you're holding, they always say diamond hands, right? Diamond hands. If you're holding a diamond though, okay? Diamond hands, for anyone who doesn't know what that means, diamond hands is basically just hold strong, all right? Hold everything strong and go and, just up or down, left or right, green or red. Hold on to your plays. Don't sell, all right? Diamond hands, because that's the strongest thing, is when you're holding a diamond though, okay? And some of these plays, they may not be diamonds, okay? They may not be diamonds. So consider that, all right? Another thing I want to show you guys, what was this other company? I want to show you where diamond hands may end up not applying as well. This is a good company, Bristol-Myers. Bristol-Myers Squibb, for anyone who doesn't know, this is a pharmaceutical company. It's actually enormous, right? And let's do that same 5-year period, okay? Bristol-Myers Squibb, BMS, they ended up down after 5 years. Because you see what I'm saying? Because if you don't know what plays you're in, this is a dividend play. You see, it gives a 2.8% dividend yield. And if you're trying to hold a stock like this for growth, for increasing wealth, it's not going to give you that, guys. It's not going to be doing it. And you're out here diamond handing this thing the whole way through, and your money's not going anywhere. In a side note, if you really want to just keep your money safe in a play, you can throw it in here, because I think it's a dividend play. It's just going to stick around like that. But then you can't expect to see the gains, and this is a different game you're playing though when you start going into companies like this. And Amazon is another example, guys. I'm just here to show you examples. Because when I first invested, I keep saying it the whole time, Tesla is my first thing when I did it, was my first investment. And that stock tanked, guys. When I say it tanked, I'm talking, let's go back up here. I'm saying it went, look at 1 month right here is 26% down, right? Right now it's 26% down for the month. It went down 50% in the month for me. When I first bought Tesla, within a month, this thing hit 50%, and it dipped even more than that after the first month. You can imagine how I felt. Trust me, the idea of selling out and just taking my half, at least I get to keep half the money, that crossed my head so many times you won't believe. But eventually, what I ended up doing was I decided not to sell it, and then I bought in a little. Not after 1 month, though. I'll say this: at the 1 month mark, I didn't feel comfortable to buy more. Then I saw it rise again later on, and then it dipped again. That second time it dipped, that's where I'm like, hey, this is not a stock that I shouldn't, I did more research on it and everything like that. I invested more the second dip. And If we look at a company like Amazon, you know, same story, same story. I want to show you. Take a look. Same 2018. It's 1915. Okay, in September 2018. When's the next time we see? When's the next time we see it? And think, it dipped all the way here. $1,300 it got down to. You lost $600 per share like that. When's the next time we see 19? All the way in April. All the way in April. So we go all the way from September to April. Then it dips again. And then it comes up. And then it dips all the way again. And then it stays. And then now look what happened in this year. This is why I say the diamond hands analogy is applied to diamonds. And for anyone who's hurting, look, I'm hurting with you. And I wish I could give you a good play idea what to do right now, what not to do. Here's basically, you have two options right now. Okay, I'm going to break it down very simply. You have two options. You either continue to buy the dip. I guess three options. You continue to buy the dips on all the plays you're in. Okay, so keep adding to your buying power, keep buying in more and more. Okay, especially in the plays you believe in. Or that's option one. Option two, you just let it sit there. You know, let it sit there and don't do anything. And then option three, you decide to sell all your stocks, shift it into different plays, and then do that. You never lose money in the stock market until you sell, though. Understand that. You never lose money until you sell, and you never made money until you sell. That's the flip side of it, all right? So what I did in this portfolio, I lost money. I lost a lot of money because I sold. Remember? I sold all of my plays, and then I shifted it. I lost money, okay? And then I reorganized and restructured it. The only time it makes sense to sell like that is if you're going to go into plays that can, you know, revamp the portfolio and bring you more money as opposed to what you were doing, okay? This is why when I tell you guys to build your portfolios like a cake, you know, have a foundation, have a middle layer, have a frosting layer. That foundation layer of your portfolio has to be thick. That has to be a huge foundation. I want your portfolio, guys. What I've learned, 50 to 60% of your money should be in those. And that foundation, 4 to 5 stocks. Pick 4 to 5 stocks that you long term you believe in. They're going to be good. They're solid. Consider honestly. Okay, I say 4 to 5 stocks. Consider 5 stocks, but one of those plays is going to be S&P 500. Keep it as the S&P. Just take a look at this. 1 year, 50%. 5 years. Even after last year, the whole dip, it went all the way down. Think of how much it must have dipped. It went from 300 all the way down to the 200s. The last time you saw prices like that was all the way in 2017. Then boom, it skyrocketed. S&P 500, there's a reason why they say index funds. Because they're stable. And when I say 4 to 5 plays, pick 4 plays that you believe in long term. These don't need to be penny stocks, guys. They don't need to be penny stocks. They can be Microsoft. Honestly, I suggest Microsoft. Apple, Tesla, Google. All of these plays can be in your foundation layer like that. And then consider the S&P 500, all right? You want that foundation there because what is the goal of a foundation when you build a cake? Is it really there for the taste? You know, when you eat that cake, is the foundation, that bottom layer, is it there for the taste? Maybe a little bit. Yeah, it's not bad. But it's there to give structure to the portfolio. It's there to give structure to the cake, you know? So that when it's green, yeah, it's going to taste a little good. When it's red, well, you're not going to dip as much, all right? This is what I'm trying to say, guys. That foundation layer, build it out like that. The middle layer, you know what I say, 30% of the money or so, throw in like 4 to 5 plays again. That's 1 to 2 year holds. And that top layer, you just keep the penny stock plays. And quite honestly, when the markets are red like this, like I'm telling you, you have 3 options, all right? And really, one thing you can consider doing is trimming out of that frosting layer and shifting the money back into a foundation. That's one thing you can consider doing, because that you don't always need a frosting layer in your cake, in your portfolios. I keep switching up cake and portfolio, but you know what I'm saying. You can shift some of that money back into the foundation layer and grow it like that, because those foundation layers, remember, thick and thin, they hold you through. All right, that's how you got to think. All right, guys. And this is another thing. I don't have a new play to give you. I don't have a play to give you every single day. I don't have a play to give you every single week. And this is the thing I really want to teach you. Investing, I know lately, the last year or so, It's been a really hot topic. Every day there's a new video, there's a new catalyst, there's a new play, there's a new this, new that. The reality of the situation, there's a reason Warren Buffett has once said, this was the famous quote. If you've been in the market even a little bit, you might have heard it. Investing is a game, I'm sure I'm butchering the thing, but it's basically investing is a game of transferring wealth from the impatient to the patient. Okay? That means those who can hold out and be patient with their money versus those who can't. And that's the reality, guys. Every day doesn't have to change. Once you build out your positions, some days it's just live life, continue working, continue adding to your buying power, and put that money back in. And just shift and just keep on doing that. Rinse and repeat, rinse and repeat, rinse and repeat. Once you have the thing structured out, that's what you got to do. That's how I'm able to create this journey myself. That's how I've been able to do this whole entire portfolio. Guys, no one shows the transparency like this. And honestly, every person would love to, I would love to give you a new play every day. I would love to go into new plays like that every day and have my portfolio grow. The reality is sometimes it just takes time, guys. It just takes time. Like anything else in life, it just takes time and patience. Anything that's really worth having is going to take that. And investing is no different. I wish I had a little bit more, like better things to tell you and whatnot. All I can tell you is this. I've been in your shoes and I've come out the other side. And let me tell you, when you end up seeing gains, like let's just pick one of these big plays, let's take Tesla. If you end up seeing gains like this, 1,000% gains, and that's not to say you need 1,000%, guys. You don't need 1,000%, 50%, 100%. In 5 years time, come on, that's amazing. And you keep adding to it. That's the key. You keep adding to it. That's why I made those side hustle videos. That's why I keep telling everybody in our family, continue working, continue budgeting, and throw the money in, and make sure you have that portfolio structured correctly. That's how you win the game, guys. That's how you win the game. All these other structures and strategies, there's small things you can do here and there, but this is the reality of it. And I'm gonna tell you, when you guys build this thing out right and you come out the other side, man, it's gonna feel good. Oh man, it's gonna feel good. Fam, just enjoy the ride. All right, these red days they suck when you're in it right now. I can promise you, when you look back, like I showed you those things with Amazon, Apple, do you not think people were panicking when that happened? You don't think for holding 1 year? Imagine being down on your investments for 1 entire year. Guys, we've only been in this 2 months. 2 months, that's all it's been. Not even 2. It's been less than 2 months. Imagine over 1 year, That's not to say this is going to last for 1 year. That's not to say this is going to last a year. But I just want you to understand that. Keep the eyes on the prize, man. That's all I'm going to say. Keep the eyes on the prize, all right? I love you guys. And as always, stay happy, stay healthy. Let's get wealthy. Take care.